Good evening, everyone. I hope you all are doing well. On behalf of NISM, I, Kiranjit Kaur, welcome you all and take this opportunity to introduce today's speaker, Mr. Sunil Gavde, sir, for this webinar, Understanding Operational Aspects and Risk Management in Securities Markets. Mr. Gavde is a freelancer trainer for financial markets and commerce courses across India. He has 19 years of experience of working with the NSE, that is National Stock Exchange. At NSE, he has been the Vice President, Business Development, Currency and Interest Rate Derivatives and Fixed Income Market segment, where he handled business development activities for equity, currency and interest rate derivatives and debt market for NSE. He has also been the relationship manager for institutional clients, handling trading operations for equity and equity-related products in NSE. Further to his credits, Mr. Gavde has experience of working with regulators, industry bodies, trading members, and market participants for introduction of various products and services such as three-party repo for corporate bonds, request for quote platform for debt securities, single bond interest rate futures and options, etc. On the academic side, Mr. Gavde is a cost accountant with bachelor's degree in commerce. We welcome you, sir, and over to you. Thank you.
Thank you, Kiranjit, for the introduction. Good evening, all. So today's our session is basically on NISM certification examination on securities operation and risk management. This is one of the important certification examination because as per the SEBI regulations, any person associated with a stockbroker, whether it is a trading member or a clearing member, in the back office operation activities or a risk management or a clearing and settlement or investor grievance, it is mandatory for them to clear this certification examination within 1 year from their employment. So it is a mandatory examination for the certain employees or certain persons. So when we are talking about securities operations and risk management, it is basically a securities market operations and risk management. So let us first understand the securities markets, then the operations of that and the risk management. So in my presentation, I will talk about parallelly about securities markets, its operation, and also at the same times what this certification examination or what this model basically contain and how it will be helpful for the market participants. So let's first begin with the securities market. So basically, for understanding securities market, it is very important to understand the financial system. Now, the financial system basically a system where there are a borrower who require the money and there will be a lender who basically a surplus of money. So financial system brings this borrower and lender together, and it is a very important for the economic development of any country. So basically, financial system is based on 4 pillars. One is financial institutions, who basically intermediaries who bring this borrower and lender together. So there can be a banking or non-banking institutions, mutual funds, or stockbroker. Then there are financial assets through which these funds are transferred from a lender to a borrower. So you can have assets like equity shares, debentures, and so on. Financial market, basically a market where the trading will happen for these financial assets like equity shares, debentures. So it can happen on stock exchanges, it can happen on an electronic platform, it can be done in the OTC market by negotiations, and various financial services provided by the various financial institutions. So these services can be purely fund-based activities where they provide funds to the participants, or it can be a fee-based activities. Basically, a stock broking is a fee-based activity. Now, in financial market, the financial market can be further segregated into securities market. So here our securities market has come, where basically trading will take place in a financial assets which is of a long-term nature, like equity shares or a debenture, where it is purely a capital formation happens, and in securities market there will be a trading happen in the primary market or in the secondary market. Then we have a money market, which is less than 365 days security, where the trading will happen in the money market. Then currency market or a forex market. And the last one is a credit market. Basically, it is a loan market where you basically borrow and loan, borrow a loan from the market institutions. So now here in this, we are talking about a securities market. So if you consider this whole financial system, we are talking about a financial institution, which is a stockbroker, financial assets, mainly focusing on the equity shares, financial market, mainly financial market, securities market traded through a stock exchange, and financial services of a stock broking. So this model basically have the contents of these four things in this model. So now let's go in details about the securities market. So Indian securities market have again four things, or it can be the framework can be have a different ways you can show it. So this is one of the way where you have a different kind of market, different products are available, as I said earlier, equity, debt, or a fixed income, and a derivatives. So in our this securities operation and risk management model in chapter 1, there will be detail about this markets, then details about the primary market, secondary market, how the primary market is different from secondary market. So those information will be available related to the market. Then the regulator, which is the important regulator. So for the securities market in India, Ministry of Finance is the main regulator. They generally provide a policy level decisions. And subsequently, then there are multiple regulators. So for our equity share, listed corporate, Securities Exchange Board of India is the main regulator. Anything related to stock exchange. SEBI is the important regulator. Then RBI is mainly for interest rate product, money market product, and banking related things. PFRDA for provident funds, IRDA for insurance companies. So these are the different regulators, and we have a regulatory structures. So again, the securities market model of chapter 2 will cover about SEBI, what are the different rules of SEBI, what are the important regulations related to Indian securities market, which is provided by SEBI. So details about that will be available. Then there are a different infrastructure provided like stock exchange, depositories. Stock exchange provide basically a trading system where people come and do a trades, and those trades are get then cleared and settled through the clearing corporations. Depository help for doing this clearing settlement. The depositories basically help in clearing and settlement of securities, and bank is helping the clearing and settlement of funds. So what are the roles of all these entities also covered in detail in chapter 2 and subsequent chapters. And there are various financial intermediaries are there like mutual fund, merchant banker, stockbroker. So we are going to cover the role of stockbrokers, their operations, their risk management, and other services provided by the stockbroker in this securities operation and risk management model. So again, this framework has been actually covered here in a different way. So as I said earlier, you can have a securities market framework in a different kind of way. So this is another way. But here, the only difference is the important participant is the investor. And this is more focusing on the from this our SRM model. So investor is very, very important. They are the backbone of any economy, and protecting the investor interest is the most important job of the any regulator, including SEBI. So investor, so what are the different kinds of investors, how the investor grievance or complaints will get processed. So all the details about this will be also covered in this SRM. So again, you can see Government of India policy directions, then different kinds of regulators, then market infrastructure. So we are going to see the role of depositories, stock exchanges, clearing corporation, clearing banks, brokers, clearing members, custodians. So in detail in this SRM model. So you can see that the basic about securities market also included in the SRM model. So this is basically a basic framework of this SRM. Now, this SRM is mainly focusing on the secondary market, securities which are traded on the stock exchange in a capital market segment. The details of this is basically covered in details, as well as the derivative market operations are covered in detail. So primary market basically where there is a one side is always an issuer who is a seller of a bond and borrower of a money. So one side is the investor, another side is the issuer. And in secondary market, there is no actual capital formation, but the securities which are issued in primary market are get traded in the secondary market. So both are very well connected. If you want a good secondary market, you should have a good primary market. And if you have a very good liquid secondary market, then only people will start investing or start investing through a primary market. So that's why both are interlinked to each other. Now we will see about the equity secondary market, because again, this model mainly focusing on the securities market, equity secondary market trading, and derivatives trading. So let's see how this securities market has evolved in last 30 years. So everybody must have seen the web series Scam. Okay, so everybody know, okay, before 1994, how was the market? So there was basically a floor based trading was happening. There is a very less transparency. Physical share certificates were there. There is an information scarcity. The only event happening after event only there was a surveillance, and limited market segments was there. Okay, but post 1994, there is a lot of changes have happened in the Indian securities market, and it has helped to grow the Indian securities market for last 30 years. For example, first thing is we have started with a fully electronic based screen based trading. So you are sitting at your home, actually can do a trading. So since you can sit here to your home and you can do trade, so that's why it is automatically have a nationwide reach. Real-time risk management is happen. And why the real-time risk management? The important word is here, guaranteed settlement. So whatever trade done on the stock exchange, it is guaranteed by the clearing corporation of the exchange, and it will be settled on T+1 basis. So there is a settlement through a clearing corporation, and it is a guaranteed settlement. So that is very, very important. And because of this guarantee of settlement, the risk management is become more important. So we will come to in detail how the risk management is important for the guaranteed settlement. Then fully dematerialization has happened. So because of that, there is no requirement of physical certificate movements. It is just an electronic transfer when there is a buying and selling is happening, and that has increased the speed, accuracy for the settlement. The surveillance is on a real-time basis. Now, all the information available, you go on any stock exchange website or any other data provided website, you will see what is the price going on of a security, what are the orders are available, how the price has moved. You will get the information of the company, past price information of the security. So all the informations are available, and it is available on a free basis. Then there are different kinds of market. We have a capital market, we have a equity derivatives market, we have a currency derivatives, interest rate derivatives, commodity, small and medium term enterprise segment. So lot of different markets are there. And there are few things which are the recent development, and we should be proud about our securities market, because these are better or actually advanced than the developed market. Like we have an interoperability in clearing corporation. So you can basically trade through multiple stock exchange and settle through a single clearing corporation. Then we have a T+1 settlement. In developed countries also, is a T+2 settlement in the capital market segment. Then we have a client level. We earlier have a client level risk management. Now we can have a client level collateral management also, and blocking of a margin at a client level. So this is various things which are very new and recent development which are coming in the market. And what is the benefit of which we have got because of this lot of development or evolvement which are happen in the equity secondary market? Similar to the secondary market, there are various development in the primary market also. And earlier there was not a lot of disclosure in there for a primary market. Now you can see there is a huge disclosure is happening in case of primary market. You can see a lot of public issues are coming, and it is getting subscribed, because there is now once the IPOs happen, within 6 days the securities are available in the secondaries market for trading. Because of ASBA, there is no issue of the refund in case of your bids is not subscribed. So many basically developments have happened in the secondary market, and at the same time at the primary market, and this actually help in developing the securities market in India. So Now we will see about the trade life cycle. So this is again a part of the securities market operations, because when we are talking about securities market operations, we are covering the back office operation, middle office operation, and front office operation of the trading member. So, and also the trade life cycle in the stock exchange. So for any trade life cycle, how it will start? It will always start at an investor level. So anybody, any investor want to participate in a stock exchange or a secondary market, they are mandatory come through a stockbroker. Okay, so the client has to go to the stockbroker, he has to register themselves. The stockbroker will do the KYC, and then they will take the order and then enter into the trading system. So it is a front office operation of the stockbroker. So this is basically operation of the front office. Now, once this order has to be entered into the order, into the trading system, the risk management and surveillance needs to be happen. So that is a job of the middle office, who basically do a risk management and surveillance. And why this risk management and surveillance is important? Because for any order entered by the broker for a client, he is responsible to ensure that it will get settled on the clearing corporation. So the responsibility will become on the stockbroker once the order enter and it is get executed on the stock exchange. So on the trading system, the order will get executed and it will pass it on to the clearing corporation. Clearing corporation will do a lot of risk management, and then the clearing and settlement will happen. Now, here the back office operation job of the broker will start, where the broker's back office basically do the clearing and settlement, providing various report to the client. So all these activities will be done by the back office. So it will start from the client onboarding, order entry on the system, trade execution, clearing and settlement, and then basically providing the information to the client. So this is the way the trade life cycle will be done, and all these operation related informations are covered basically in this securities market operation and SRM basically model. So you can see that below this trade life cycle, lot of checks are given. Okay, there is a price range check, there is a margin check, there is a single order quantity checks. So all these checks are nothing but a risk management. So risk management is not only related to margin check. Okay, if the client has given margin, then we should allow his order, because there can be various other issues can also happen. For just for an example, a fat finger error. Okay, instead of writing a 10 rupees price, by mistake it is written 100 rupees, or instead of selling 20 quantity, you have done 200 quantity. So those types of error also can be there. Or instead of selling or buying a security, you have bought B security. So to avoid such types of error and other kind of error, these various checks are available. Now these checks are available, certain checks are available at an exchange level, certain checks are available at a stockbroker level itself. So stockbroker will have a margin check, stockbroker can have a order level check, stockbroker can have a UCC or PAN check. So these checks can stockbroker give, and it is the responsibility of a middle office operational guy to have a risk management and surveillance to ensure that, because they are responsible to ensure the clearing and settlement of whatever trades executed by the stockbroker. So that is why the risk management become very, very important. So this basically trade life cycle basically gives you idea about what are the different kinds of operations and how the trade life cycle happens in the securities market. And this is also covered in the securities market operational model. Now the risk management. Now there are various kind of risk. There is a market risk. There is an operational risk. As I said, you have entered a wrong thing, or client is not ready to take the delivery of a security, or he is not ready to pay the money. Then there can be a credit risk. You have given a loan to somebody, broker has given a loan and it is not received, or you have done a margin funding and the money has not been received. So there are various kinds of risks. So for all this risk management is very, very important. So here I am mainly talking about a market risk, because in this module, we have covered more from the market risk side, where you have a risk management. which is avoided with the help of margin, which is the upfront money which you receive as a part of margin. So, and why market risk? Because you know that there is an uncertainty, and because of that uncertainty, securities prices will not remain constant. So if the securities price is 100, it can move to 90, it can move to 110. So people have some misconception. People think there will be a market risk only if the price is going down. So if price become from 100 to 100 and is become 110, there is no market risk. If price become from 100 to 90, then there is only a market risk. But that is not the case. We will see with one example, then you will understand why there is a market risk both the sides. Suppose investor A bought 1,000 shares at ₹100, and the trade has happened with say investor B. They will not come to know each other on the stock exchange, but let's assume B 1,000 share at ₹100. Now, if tomorrow price go down to 90 rupees, now for the buyer, it is a notional loss because he has bought the securities at 100 rupees. Now the price has become 90. So for him, it is 1,000 into 10,000 rupees of a notional loss. On the other hand, suppose tomorrow price become 110, then it is a notional loss for a seller because he has already sold the security at 100 rupees and now the price is 110. So for him, a notional loss of 10,000. So you can see that there is a risk from both the sides. So it is possible that tomorrow price become from 100 to 110. And because of that, the seller is not ready to sell his security. So then it has become a risk. So now to cover this risk, the upfront margin is taken from the market participant, whether you are a buyer or you are a seller. And this margin ensures that both the parties will satisfy or fulfill their obligation. So suppose we have taken, if the margin is taken ₹20 from both the participants. So we know that even though it is a 10 rupees loss, the investor B will come and sell at say 100 rupees, even though the price has become 110, because he has already given the margin of 20. So that actually ensures. So this margin is basically how this margin is decided for a various security. What are the scientific rules for in the case of capital market, in case of equity derivatives market. So margin is collected by the clearing corporation from the clearing member or a trading member, and trading member collect the same margin from the client. So it is very, very big. It is important for a client to understand what is a margin guidelines. For a trading member also, it is very important to understand. So all these risk management, margins related things are basically covered in the SRM model. Similarly, we are talking about the post-trade activities about clearing and settlement. So all the clearing and settlement activities, how the clearing happens, how the obligation is generated in case of securities market, and how the settlement will happen of the funds as well as securities between stockbroker and clearing corporation, and from stockbroker and a client. So all these things related to the back office operations also covered in detail in this model. So from onboarding, KYC to the end providing his security, everything is covered. In addition to the stock exchange, trading and clearing and settlement and risk management take place at in this. So because of this, we have spoken about equity market involvement. What has happened in last 30 years? So this is first we will see from the point of the market participants. Now, if you see in a capital market segment, we have 1,275 members in BSC. In NSC, around 1,230 members, and corporate broker are 1,100. So if you see, since the SRM model is mandatory for people associated at a broker end with for a various operations, so they needs to pass this. So this is a big things. And even other market participants, if you are a mutual fund, since you are participating in the securities market, you should know the risk management, because you have to give the margin to the your broker or your custodian or your clearing member. So you should understand the margin operations of the securities market, whether you are a bank treasury and you are investing in the equities market, or if you are an insurance company treasury and you are fund manager and you are investing in the equity segments. So or you are a portfolio manager, anybody who is associated with the securities market trading and a clearing and settlement needs to know about securities market operation and risk management. So for all of them, it is become important to understand the securities market operation and risk management. And this model actually gives a better idea about perspective about all these things. Now, what is the scope of a securities market? You can see that in last 30 years, we can see that the securities market has grown tremendously. So I have just put some numbers to give you just perspective about the how the securities market has grown in last few years. So you can see that first, if you see the market capitalization, the current market capitalization is 2,60,000 crore, 260 lakhs crore, sorry, approximately. So what is market capitalization? Market capitalization is a outstanding issue shares into price. So it is a combination of shares as well as price. So once number of shares increase, your market cap will increase, or if the price increase, market cap is increased. So because of both these things, because of primary issuance and there is a reissuance by the existing company, the number of shares will increase. Obviously, market share will increase. And we have seen that market prices are also increasing. If you see the index like Sensex, Nifty, and you see the growth, so they are also increasing. So because of these both things, you have a market cap increase, and the compounding annual growth for last 10 years is almost 15%. Now there are 5,400 listed company in BSC. There are 2,119 companies in NSC, and these are increasing. So this again help in the increasing the overall securities market operation. The average daily turnover of cash segment is 72,200 crore, and this turnover is basically of a one-side turnover. So you can see if you do buy plus sale, then it is become double. So, and there is an increase of almost 18% in last 10 years. So you can see how the securities market is growing in last few years. One of the biggest industry which have grown in last few years is mutual funds. The asset under management for mutual fund is around 40 trillion rupees. And in last 10 years, it has grown 5 times. So you can see the growth means by this way in 2013, the AUM only will be 8 trillion, and now it is 8 into 5, 40 trillion. And total number of folios are 14 plus crore in case of mutual funds. Total number of demat account in NSDL 3 crores and 8.30 crores in case of CDSA. This is mainly we are talking about capital markets. So in derivatives market also we have a huge growth. Now, for example, National Stock Exchange is the largest stock exchange in derivatives in terms of number of contracts traded. So there's a huge growth in a derivatives market also, whether you take it a equity derivatives or whether you take it as a currency derivatives market. There is you can see a tremendous growth happening in this market. Now somebody will think that, okay, there is a huge growth is happened in this market for last many years, 10 years. So whether there is any scope of further development in this market. So I will give you certain numbers from one of the report which has come, and you will come to know what is a great perspective we have in the securities market for this. Now, for example, our market cap today is INR 260 lakhs, and our GDP is also around INR 270 lakhs approximately crores. So the market capitalization is 1 time of the GDP in case of India. Now, in developed countries like USA, the market capitalization is 2 times. So if we are thinking that our market cap also will become a 2 times of GDP, and our GDP will increase say by 6-7% for next 25 years, you will see a CAGR of 13 to 14% for next 25 years as far as market cap is concerned. So this much growth is possible as far as securities market cap is considered. Now, take the example of DMAT. You will see, oh, there is a DMAT account of 8.30 crore. And I think there are around 7 and or almost 8 crore people actually. Basically, it means the retail investors are there in the market. So it is how much percentage of our population? 5.5 to 6% of our total population. In US, this is basically around 45%, 40 to 45% population participate in the securities market. And in India, it is only 5.5% to 6%. And we are now, yesterday's report only shows that we are number one as far as population is concerned. So you can see how much growth. So suppose today there are only 8 crores. So it can actually increase to 50, 60, 70 crores in next 25 years. So that much penetration is possible in securities market for the investors. Asset management, a mutual fund has grown 5 times, but still asset under management in equity for mutual fund of GDP is I think around 16% or a 14%, 16% in India. And in basically in US, it is almost around 50%. So you can also see how much there is a possibility of a growth of mutual fund asset under management. And as mutual fund growth, automatically there is a growth in the securities overall securities market. See, similarly in case of insurance company. So the idea of giving this information is that you can see that there is a tremendous opportunities and growth will be there in the securities market going forward. And to understand a securities market at initial stage, the securities operation and risk management is the best model. Even not only for the people who wants to take a job in a trading member or a clearing member end, but also for normal students who wants to understand securities market and in future wants to trade in any of these financial institutions. So any financial institutions which is related to securities market, it is very important to know this securities market operation as well as risk management. So now I have basically tell you mainly from the securities market point of view. Now we will see or focus mainly what is this securities operation and risk management certification is all about, for to whom it is important, what things are covered in this module, and how the certification can be, or how you can, what is the exam structure for this. So as I said earlier, this is basically any person which are associated with the stockbroker, whether it is a trading member or a clearing member of the stock exchange, and he is basically doing back office operation, he's handling investor grievance, he's doing risk management, he's doing clearing and settlement activities. For them, it is mandatory by the SEBI to basically have they have to certify and pass this SRM exam, and they have to pass within 1 year from their employment. So this is not only that you should have it, it is mandatory to have it. Then next, what is the structure of this exam? So it is again a computer-based multi-choice questions. There will be generally a 4 choice will be there, and there will be 1 correct answer. Test duration will be 2 hours. There will be 100 questions, and the passing is 60%. But there is a negative marking of 25%. So each question will have 1 mark each, and if the answer is wrong, then you are losing 0.25 marks. So that is very, very important that even though it is since it is a multi-choice questions, people tend to choose one of the options, but there is a negative market, so you should have a thorough knowledge, and passing score is required is 60%. So 60% is a passing, and the fee for this is 1,500 rupees. So to whom it is important? So as I said earlier, it for the employee of trading member and stockbroker, it is important because it is mandatory for them to do. Even any risk management professional. So as I said earlier, if you are in the mutual fund industry and you are handling their risk management for equity segment, or you are in a any insurance company, or whether you are in any portfolio management, wherever you are handling a risk management of a securities market or equity market or a derivatives market, this is a basic thing which you can learn. So you will get an idea about, or you are dealing as a person with your stockbroker, then you will come to know, okay, what is a risk management, what are the margins requirement, what are the things I need to provide to the trading member, what are the trading member or the clearing member will provide, how the clearing and settlement happen of the trades which are done on the stock exchanges, how the risk management is happen, how the margin will be provided, how can, as a investor, I can provide a margin, and then where I can see the informations, what are the reports I will receive. So not only from the point of view of the stockbroker, even you are opposite sides, this model will become very, very important. And also students or a professional who wants to take a knowledge about the securities market, its operation, its risk management, for them also it is become very, very important. Now, what are the things which are covered in this model? So when I was going through the presentation, I have covered a lot of things, but again at one place, first basically it is what are the different products are available in the securities market, what are the different products like equity shares, debentures, REITs, InvITs, money market, then primary market versus secondary market. So all information is provided in the initial chapter. Then what is the role of a regulators? What are the different regulations of the SEBIs with related to stock exchange, which is very, very important from the stockbroking and operations point of view. Then what are the various other market participants, whether it is investors or whether it is a clearing bank or whether it is a custodian, depositories. What are the roles of these various market participants in the securities market? That is also covered. Then there will be what are the trade cycle? What is the front office operation, middle office operation, back office operation of the broking firm? What are the different compliance needs to be done by the broker? So those things basically cover in subsequent chapters. And then the risk management done at the stock exchange level, similarly requirement at the broking end level. Then what are the various reports needs to be generated by the broker and provided to the client? What are the various compliance needs to be done by the stock brokers? All these informations are covered in the middle few chapters. And then how the clearing and settlement happen at a stock exchange level. What are the things needs to be ensured by the stockbroker or a clearing member for the clearing and settlement, how the netting take place, how the fund settlement happen, how the security settlement happen, what will happen in case of fund shortages, what will happen in case of security shortages, what will happen in case of margin shortages. So all these basically things are also covered in the model. And there is a detailed chapter on risk management on a capital market side as well as derivative side. So there is a risk management is always different for a capital market and a risk and derivatives market. Why? Because in capital market you buy today and your settlement happen tomorrow, so there is a risk of only one day. But in case of derivatives, your position may be open till the expiry, and there are multiple. For a single security, for example, a security ABC, there will be a future of a 1 month, 2 month, 3 month, there will be options. So for a single security, there are variety of basically contracts are available, and the participants may have a position in a different contracts. So because of that, the risk will be different and the risk management will be different. So those risk management also covered in details in this SRM model. Then investors are become very, very important. So how the investor grievance happen, basically at a stockbroker level, then at a exchange level, then at a SEBI level, then how the arbitration mechanism works. So all these investor grievance related information also available in detail in this model. In addition to that, So broker has a relation with the investor or a client, but that client will not only have a one requirement of trading in a securities market. He may like to trade in a issue in a primary market. He wants to invest in a mutual fund. Also, he wants some other activities. He wants some reports also. So what are the other basically services which can be are generally provided by the stockbroker to the same investors? So basically, by using the existing infrastructure and for existing clients, how different kinds of services which can be provided by the stockbrokers also covered in this SRM model. So this is basically give a very detailed information about the securities market operations, and that's why it is a very good starting point for any market participant who wants to learn about the security market operation and risk management. So these are the other various market models which are available of the NISM. So if you have interest in a specific product, say you are interested in the currency derivatives, or you are interested in the equity derivatives, or you are interested in the interest rate derivatives, a specific product, so you can have this model. Or you want to generally know about the derivatives in common, then there is a common derivatives also. So this is a basically based on product. Then for mutual fund distributors and for AIF distributors, again there are various models are available. Then models on advisories, RTA operations, and other models. So these are the all others model which are basically available along with this SRM model. So that's it from my point of view. So now we will move to the question and answer session.
Yes, sir.
Yeah.
So we have 2-3 questions. The first one is, does this module help one get jobs in back office of brokers and depositories?
I'm not sure about the depositories, but it is very sure that for back office of the stockbroker, this model will surely help a market participant, because it basically provided in detail what are the different kinds of back office operations which happen at a stockbroker end, and how it can be done. So the details are provided, especially about clearing, settlement, or confirmation of trade. So those details are provided, and from the depository participant point of view, only the clearing and settlement of the securities are covered in this model. So you will come to know how depository participant role will be there as far as clearing and settlement of securities concern in the with regards to the securities market.
Thank you, sir. Next question is, how can one prepare for SRM module?
These as NISM, all NISM models have the workbook has a detailed workbook, and it actually covers everything. And as far as my understanding, nothing comes other than what is there into the module. So if you actually read the model thoroughly, you understand the model properly, there is no other things you need to know. If so, it is not that okay, I have to read the module, I have to go and see the SEBI circulars also, or I have to go and see the exchange various circular. It is not required. If you read this model properly, thoroughly, and understand, then it is more than enough, because whatever questions come, everything is come from the workbook, and this workbook are written in very detail, means everything is covered. So you read the module, understand the module, and I think there will not be any challenge.
Thank you, sir. So there's another question regarding, is SRM model and research analyst module same?
Research analyst model and SRM?
Yes, sir.
No, it is a totally different model. Research analyst model is different. This is purely stockbroker securities market operation. So when somebody wants to trade in the stock exchange and then how the trading, risk management, clearing and settlement happen of the secondary market trading of the stock exchange. Whether it is an equity market or even the derivatives market, clearing, settlement and risk management also cover in this, because derivatives market is also equally important. So whether it is an equity or a derivatives, and when I say derivatives, whether it is a equity derivatives or whether it is a currency derivative, doesn't make a difference. The related things are covered here, and research analysis is totally different because it is mainly focusing on the research. So it is totally different models.
Fine, thank you, sir. So now we would like to conclude our session. So presenting a vote of thanks to you. Thank you, sir, for describing and risk management aspects in the securities markets and informing them about NISM's SRM certification examination. Thank you, sir. Thank you, everyone, for joining us. In case you have any query regarding NISM certifications, you may please log on to our website, that is www.nism.ac.in, or you can call at 8080806476. Thank you.